9, type 9, type 9.
Good morning, everybody. Welcome back to the live stream. Good to see you guys. All right. It is a Wednesday with the Everyday Growth Advisors, the live stream that brings the news and a good summary so that you are prepared to take on the day if you're trading. Once again, yours truly assisting you out navigating these financial markets. We'll be doing the usual stuff and then a little bit of the new stuff. Today, I intend to go through a little bit of background about a continuation story about oil. The developing crisis that we've been having. Then I'll touch a little bit of technicals on SPX or SPY as we all know it. Of course, we're going to read the news in the pre-market first, and then we'll jump into any questions that you guys have. And I'm going to take. So yesterday I posted an Instagram update, and I was asking you guys if there were some specific things that you wanted me to go through on this stream, and there were some replies that I got. So I'm going to go ahead and do those as well. Also, just a reminder, if this is your first time here, please hit the subscribe button, click like. It helps me out a lot. I would appreciate it. And thank you for your time. So let us begin. So in news today, we have, just not a lot of interesting stuff as usual. China considers dropping numerical GDP growth target. We were expecting this. Actually, the whole world is going to drop the GDP growth target, so it doesn't really matter at this point, right? I think the US already did, so now it's just a matter of the rest of the world to do so. Singapore unveils temporary relief measures for property firms. Okay, so housing markets around, well, real estate in general is just getting trashed around, right? And then the world's PMI signals 15% contraction. Purchasing index, right? So we know that people are starting to save more. This is what happens in an economy where people are scared and afraid of the future. They will cut back on spending, which is not what we want, which is what the central bank is trying to avoid altogether. It's so that people are going to continue to spend and the stimulus is continually provided, so we don't go into a self-cascading economy. With a lot of what's going on right now. By the way, all the rest of this news on the headlines here are complete trash, so I'm going to just skip Bloomberg altogether. I don't see anything that's eye-popping to me. White House considers phasing out virus task force. This is what Wall Street Journal is saying. I don't know why it keeps clicking on that. It's so weird. Okay. And U.S. corona cases surpassed 1.2 million. Okay, so I guess we're corona millionaires now. And hard-hit Nebraska cities charts its own way to fight coronavirus. Okay, so you're going to see some developments out of every state now. What they're going to do. Some states are going to take it seriously. Some states aren't. And it's going to be up to each state to manage it, just like how the president said, right? He doesn't want to get involved with how they're managing it. The front line of the Wall Street Journal summary is we have 1.2 million cases, and each state is going to manage it the way they see fit. Okay. And then also we had Disney, which announced its earnings report, and I actually read it. And if you actually look at the report, it wasn't as bad as it seems, but it is bad. Just because the sheer amount of foot traffic down in their in their parks is causing a depression in the revenue and it's unforeseeable into the future, I will not be buying Disney at this time. However, Beyond Meat showed promising results with their earnings report, which is something that I may consider buying if I can get the right price. I will not be a buyer on the rally today. It's not something that I do. I don't chase stocks because I wait for the right moment, like a viper in a pit. And when it comes to me, I'm going to snag it. So you got to wait for the right moment and then you deploy your cash, okay? I already see some requests over here, so yeah, go ahead, drop your questions and stuff in there. You guys already know how this works. You guys are veterans of the Everyday Growth Advisor stream. I'll cover all those things as fast as I can right after I'm done with the analysis, and then it's going to be a great stream. Okay, so pre-market movers today, we have NCLH, Norwegian Cruise Line, about 2%, not too bad. 8 million shares traded pre-market. That's actually a lot of shares, so might want to keep track on that. NEO also traded today, up 10%. I actually traded this 3 weeks ago, made a nice penny overnight. Let's see, Microvision, no, we're not going to trade that, not going to trade this, not going to trade this, not this neither. I don't know what this is, must be Medigus, no idea what that is. CCL, Carnival Corp, seeing inflows of about 2%. And of course, Beyond Meat with a great beat. And it kind of makes sense. They were expected to beat, in my eyes at least they were. I was expecting them to beat based on the fact that people are going to switch and they're going to start realizing the benefits. I myself, I'm a vegetarian, so I love Beyond Meat actually. But then if you ask me to compare it to other types of alternative plant protein, actually my first pick wouldn't be Beyond Meat. It would be Impossible Meat, like the Impossible Foods. I just find it better, but because it's more texturized. But this one has like I don't know, I guess it's more like real in some way. The taste is a bit more like, I don't know, it has that game and like it bleeds like real meat, If you haven't tried a Beyond Meat patty, I think you should. And if you have, I'd love it if you put it in the comment. Tell me what you think about it, because you know what? We all have different opinions and it's nice to see what your opinion is. Okay, some other pre-market movers and losers. We have CPS Technology, we have China Rapid Finance. These, I'm not sure what these companies are. Pinterest, ooh, down big time. I guess they had an earnings miss. Man, I remember betting bullish on this stock last ER as well with option swing, and then we all got wrecked. So that was remember guys, earning reports are 50-50 flips. We try our best to figure them out, but they're flips all the time. On Finviz, let's have a look at what's going on over here. I like Finviz as well. It's a great scanner app, great scanner website. You can use this as well if you are a trader. I like to look at Finviz as well because they give you insider trading info as well. Looking at insider trading info around this time is actually very, very beneficial because if you see a CEO or someone selling a huge block of shares for a big amount of money, you should consider checking out why they're doing so. If someone's buying shares, there's usually very few reasons why they're buying shares. But if they are selling shares, there's usually a lot of reasons why they're selling shares. If you're buying the share, it just typically means that you believe in the company's vision and you're invested in it. But if you're selling shares, that could be a whole bunch of reasons, and I like to find those reasons out. I'm a digger. I love to dig. So that's my job, right? Exactly what I'm doing right now. I'm digging for you guys. Okay, apart from that, you can see some top gainers here, top losers here. And what I like about this website also is it gives you the tickers and gives you the trend line or the signals that they're in. Like, for example, look at this. It's in a head and shoulder pattern. Can you see that? It's in a head and shoulder pattern, right? And it shows you, look, the left, the head is the H, the left is the left shoulder, the right is the right shoulder. Alrighty. So, here, nothing much, nothing. Oh, Twitter, interesting. Chief accounting sale. He sold $290,000 worth of shares. Logitech's CEO, he sold 62,000 shares. Okay. All right, so we should go look into those. All right, let's do the summary of the SPY technicals. I'm just going to go through it real quick here, and then I'm going to get into my oil debrief. After which we can get into some questions and answers. Okay. Um, so first things first with SPY, I've been talking about this for a while now. We have been in this region for a while. This 150 moving average combination with the 200 moving average and the 61.8 has been a strong resistance level. Okay, we came down from those highs, and now we had a impulsive wave, and now we're having a corrective wave, and now it looks like you can see it on the 4 hour that we are creating a larger head and shoulders pattern, where this is the head, and this is the left shoulder, and this is the right shoulder. Okay, there it looks like it, and it certainly does feel like it. Head and shoulder pattern. This is the head, this is the shoulder. This is a bearish reversal pattern, and if we break the neckline, which is here, then we will see downside further. However, we could just come down here and then just bounce back up. So that remains to be seen. But right now, it does seem that we have failed to break this level multiple times. It's either we keep consolidating and then break out, or we come down to this level and then try to attempt to break it for a second time. Okay. So that remains to be seen. That's a technical update with SPY. Everything is in technicals wise is very flat. You can see all moving averages are kind of going flat right now, and the on balance volume indicator is also going pretty flat right now. RSI is literally in the middle, so we are literally in just a sort of an indecision on where we want to go in the long term. But if I were to bet my money, I would say that we're going to go down before we go up, but we're eventually going up. So if you're taking long positions, make sure that you take them for 6 months out. Don't take the risk to plan short-term positions in this market. It doesn't seem like an atmosphere where short-term positions would benefit. So you can see SPY is starting a little bit of a sell-off here, and we'll see how that continues on. But that's a technical update with SPY. I do that every live stream, and I hope that helps you out. So I'm going to leave that there. All right. Welcome in, guys. Thank you for being here, by the way. Really appreciate you guys taking out the time, coming to this live stream. I do appreciate all of you guys. Thank you for liking. That helps me out a lot as well. Just also an update about the 7 days of growth program that I started. And I'm planning to launch that on the 11th of May. So next Monday. We have filled 15 out of 20 spots. If you are interested, we have filled 16 out of 20 spots. If you are interested, please message me on Instagram to secure the balance 4 spots. The last person who signs up is gonna get a special gift from me. Okay, and I will announce what that gift is probably later today. So if you're interested in the 7 days of growth program, it's a $197 program for 1 week of guidance. There's going to be 4 lessons covering my personal system, and there will be group lessons that will have homework and a deep dive into options trading with guidance, personal guidance, and it's going to be great because I just tested this with the first batch and they absolutely loved it. If you want to see feedback from the first batch of students, the mentees who just took this course, go to look for this post on my Instagram and look at the comments. They've put their testimonials on there. And I'm going to also make another separate post to highlight those testimonials, what they liked from the program at the end of this program, which ends on Sunday. So you get all of these things, personal guidance. We're going to guide you. I'm going to guide you using paper trading, and then you can embark on real money later. There'll be a private access WhatsApp group where you and other mentees will be a part of. There'll be recordings of every single meeting, and there'll be prioritized access to my playbook, which is the trades that I take on a daily basis. So in case you're interested in that, hit me up on Instagram. 4 spots left. They're going to go fast. The last stream took basically all of them. So this time it's going to probably just fill up right away. Okay, oil update. That was just an intermezzo. So I see that many people are still asking me questions about USO, and people are continuing to buy into this fund. I'm going to stress it very, very carefully, and I'm going to try and lay it out for you here as quickly as possible so that you can understand this. You have to understand that oil is something that can't just rebound like stocks, okay? You have to analyze the data. You have to look for it. You have to find it. See, if you don't analyze the data, how are you going to understand what's going on? You can take a stab at the dark and say, oh yeah, I think that oil is going to rebound by December. But do you know that's the case? That's not true, okay? You have to analyze the data. So we had a global consumption of oil at 85 million barrels a day before COVID-19 happened, okay? That consumption has now dropped to 65 million barrels per day. The current oil production supply is 95 million barrels per day. We have a oversupply of 30 million barrels. I've gone through this before on the live stream. I'm going to go through it again so that you guys get the picture, okay? Because I don't think many of you guys get the picture. You guys are continuing to buy USO thinking that the fund is going to recover very quickly. But and then on top of that, just because USO had a reverse split, it looks like the fund is back to $20 and you're like, oh my God, I need to buy it now. Hello, the reverse split doesn't change anything about the pricing. The only reason why they did a reverse split so that they avoid going below $1, which causes this fund to be delisted. Know your facts, guys, okay? So there were 3 proposed cuts by OPEC, okay? There was one that was proposed till after H2. There was another one, till H2, another one after H2, and then another one in January 2021. The first one's supposed to be about 10 million barrels. The second one's supposed to be about 7.5. The third is supposed to be about 6 million. That still puts your production or your required demand at 71.8, and we are producing 95. Can you see how that's still a problem? We are still oversupplying by almost 20 million barrels, okay? And this is going to take either an increase in demand, okay? It has to be an increase in demand of 10% to 15%, or there has to be a decrease in supply of the same. So try to understand the situation, okay? If none of these two things happen, you should not be a buyer of oil. Remember, stop thinking like a trader and start thinking like an investor. This is going to change your mentality and the way that you think, okay? You got to stop thinking that just because things are cheap, that works for stocks sometimes. For example, if it's a good business and it's cheap, yeah, heck yeah, I'll buy it, you know? But if it's oil, it's a commodity. It's a completely different thing altogether. So don't get sucked into the idea that you should buy oil just because it's cheap. It's a commodity. It's not traded like a stock, okay? And, oh, sorry, I forgot to show you one more thing, right? This is the reason why I opened the page in the first place. You have to realize something, okay? You have to find out, first of all, like many of you buy USO thinking it's United States oil, but what are you actually buying? Remember, you have to find out what the holdings of USO is. Do your due diligence and do research instead of reading articles from bullshit people who post trades on TikTok, Instagram, and, you know, I don't know. I've seen a whole bunch of people like posting stuff like, oh yeah, you know, the oil thing is down, and so I'm taking this moment to invest 50,000 shares or $50,000 into this, hoping that oil is going to recover. And they act really smart about it because they sound smart and they make these short form content that makes you drawn to it, and then they get the views and then they dip out of those shares and you're the one caught holding the bag. So I'm trying to assist you to not get caught over here, okay? And the reason why I'm telling you not to get caught is because look at the target weight of these contracts. Remember, USO is a fund that holds oil contracts, okay? Because oil is traded on a contractual basis where it's crude oil and they have expiry dates, okay? You can see it right here, right? Now, these contracts have given weights, okay? And now, right now, the biggest weight is for the December contract because of how the fund is balancing its obligations, okay? The lowest weight is for November, okay? Because typically, these are times in which the consumption of oil is less, and so, you know, they basically make it skewed in such a way that the fund would benefit from these synergies, okay? So look at the commodity interest and the price of these correlating assets, okay? So you have the July, it's priced 26. By the way, this is after the reverse split. So now you're looking at prices that are higher, okay, because of the reverse split. Before this, it was at $2. Remember that. Okay, and then they had an 8-to-1 reverse split, so every share got reduced by 8 times. So now each share is back to $20. All right. So look at the market value of these, and then look at the price of the October and June contracts. Do you see how these are the rest of them? Well, December also, you see that? December, October, and June 21. These three are the only contracts right now that are trading above 30 some dollars versus the August, September, and July. Okay? And what this tells me is that traders are starting to price in a recovery between this time. They are thinking that oil is going to recover before or after this period over here. Now, does that mean that oil is going to recover? If traders think that it's going to recover, that remains to be unseen. But it doesn't mean that you should buy the fund. That's the reason why USO is up 4 or 5% the past few days. It's because people are starting to price in the future, assuming that oil is going to rebound. So remember that assumption is different from fact, and you should always follow the facts. If we don't have news that supply is cut or demand is back, and right now we are hearing some news that some states are opening up and countries are opening up, but we don't have a for sure. Okay. Once we have the for sure, I would tell you, you know what? Sure, go ahead, buy oil. I'll buy it myself, and I'll give you that update. But right now, I am not buying oil simply because I don't feel it's a good asset to hold. Remember, it is an asset. Okay, it's a risky asset, in fact. Other things that this fund holds, don't forget, is cash and government bonds and treasury bills. So know what you're buying. Okay, that's all I'm trying to help you out with this. All right, cool. Now let's do. Okay, there was somebody who asked me. There were some questions on Instagram, and I'm going to try and go through them right now so that I can address those questions, and that person would be happy that I answered the question. So let's have a look at it real quick. I'm going to look at the questions that were asked. So the first question was Beyond. Well, Beyond just beat earnings, so I'm not really sure what else to say over there. Unless you want me to go through the earnings report, which is going to take a little longer. So you know what? Let's do Beyond on the next. Let's do the Beyond earning report on Friday. I'll promise I'll go through it, and then we'll do. Okay, there's another question asking how and when to use EMAs. Okay, so I'll go through this one. That's a fairly easy question to answer. Okay, so first of all, if you wanted to get a better understanding and like an in-depth understanding of how to use EMAs, I would recommend you to go and check out my video on moving averages. I've done a full breakdown on moving averages right here, Beginner's Guide to Moving Averages. It's a 18-minute video, and it breaks down everything very, very clearly there. But in a short understanding, I use 3 types of moving averages, and they're all 3 exponential moving averages, which are the EMAs. And the reason why I choose EMAs is because EMAs react very quickly to time, to the movement of the stock. Okay, if something moves up very quickly, the moving average reacts with it. If something moves down quickly, the moving average reacts with it as well. Okay, and it's best used on a 1-hour time frame because it kind of helps you to visualize a little better, and it's more accurate on a bigger time frame. The basic understanding is when the 50 moving average moves below the 150 and the 200, and in this case the blue is the 50, and the green and the red are 150 and 200. You can see this is what we call a death cross. Okay, and the death cross occurs when the 50 moves over the 150 and 200. Okay. And when the death cross occurs, that creates a change in trend from uptrend to downtrend and a price that goes downward. Okay, the inverse is true for when the EMA crosses above. You can see it here. Like for example, this is Apple on a 1-hour chart. When the EMA crosses above, then you can see Apple switches trend and starts to go on an uptrend. So that's a very, very intro to the basics of how you use these, and I hope it answered your question. Okay. Breakdown of Monday's Tesla trade and today's Apple trade. Briefly use. Okay, so let's break down the Tesla trade. That was a good one that I took overnight, and I really liked the way that it went. So I will show you what I saw. I was looking at it on the 5-minute because I was trading intraday, and I usually look at 5-minute or 10-minute. Okay, and so right when that happened, I was looking at Tesla. Tesla had just this was the day after Musk tweeted his bull crap, right? And then Tesla opened up and rallied strongly. Okay, it rallied strongly up here, and it started to consolidate sideways. Okay, for a while. And I was just watching it at this point because I didn't see a breakout with good volume. I just saw, some spurts of a little bit of it testing the resistance, and it did so multiple times. Then somewhere a little bit before market close, Tesla, it broke out of the resistance, okay, over here. And this is what I saw that made me take the trade. I saw it breaking out of resistance with decent amount of volume, okay? And I decided that I'm going to take a out the money contract to play this to the upside, because at most, if it wants to rally, and Tesla does that from time to time, it could go up to 860 at least. So I decided to go a little out the money to get a better risk to reward and get the contract price down so I could buy 2 of them, okay? I purely did this out of the idea to use a next week expiry, and they were super expensive this week, so I took the next week expiry to something that I could afford, but also give me a good Greeks blend, okay? And the Greeks for the $900 contract had very good open interest, and the volume was decent. The IV of the contract was about 40%, which was awesome. To get a contract like that is a dream for Tesla, okay? Shortly after that, Tesla decided to take off and close bullish for the day after hours, and then gapped up the next day, and I took my profits right at the open slightly. What I did was I didn't take my profits, but I set a stop loss. I set a stop loss over here, and as Tesla moved up, I moved my stop loss up, and then Tesla came down and touched my stop loss, so I maximized my gains over here. So that's how the Tesla trade went, and that's the reason and how I took it, okay? After which I proceeded to play the downside because I knew Tesla would come down to cover this gap. So I played Tesla to the downside and made a little bit of change from 785 all the way down to about 770. Okay, about $15 of premium, bagged it, and ran for the exit once again. So that is what the Tesla trade was. And then I want to go through with you guys. I know a lot of you have the questions about the watch list and how do you use the watch list, right? Because you're confused. Some of you are unsure on how you use the watch list, and I want to show you how the watch list is used so that you can understand it. Okay, so for example, when we'll post the watch list every day, okay, and it says Apple 298 plus calls or puts at 294 minus, what does this mean? So you would go to Apple, okay, and since you're looking at this intraday, this watch list is perfectly designed for day trading. Okay, we don't recommend you swinging these positions, but in some cases it is a good swing. But I recommend you to day trade them, not to swing trade them. Don't take them into the next day unless you're really confident and you know what you're doing. Okay, so if the watch list says 298 plus or puts at 294, this assumes that you would take calls only when it breaks 298 with good volume, or it breaks 294 with good volume as well. Okay, so 298 plus, and I will look at this as a 15-minute. So yesterday, for example, Apple opened up and then it broke 298, right? But look how it broke 298. Did it break it with good volume? It didn't. So this was not a positive signal. Okay, but you can see one that was a positive signal. So you see Apple calls, you see how it's a yellow tick. That means it gave a move, but it wasn't on good volume. So this wasn't a good signal, okay? This was an okay signal. That's the reason why it's like a orange tick instead of a green tick. Now let's look at one that gave a good signal, right? Boeing puts at 130. Okay, so it's the watch list said Boeing calls at 135.7 plus, or Boeing puts at 130. Okay, so let's go to Boeing and look at Boeing. What happened yesterday and how do we break it down here? So Boeing opened up yesterday at 126. And then started to retrace up over here, right? Now over here is where it gave the signal, I'm guessing. So you could have taken it over here because it was decent volume, bigger than most of the volume around it. And on balance volume is already pointing down, right? compared to the rest of the day's volume, you can see the average volume of Boeing is about here. Oh, let me draw it better. Hold up. I need to get a ruler, guys. I need to get a ruler. You can see the average volume is about here, right, for Boeing. So this was considered decent volume, right? As it came back down, it sold off. And so this was your entry when it broke 132, okay? So your entry at 132 would have been here. It's 132, right? Yeah, let me make sure. No, 130. Sorry, 130. 130, a little higher, a little lower. So here, 130. So as it sold off, if you took it at 130, and because this volume came out, you could see you got a confirmation. At this candlestick here, you could have taken your put, okay? Or you could have waited for this candlestick over here on the pullback, right, to take your put. Either way, you could have done this or this entry here, and it would have yielded a 3% move downward, because that's what it was, right? Boeing was a 3.8% mover yesterday, a $5 move from 130 all the way to 125. So you can see that from here to here. We don't take it from here, we take it from here, because this is where the move happened. The move with the volume breakout was here at 130. So we take it from this level to down where it closed. And if you closed out at the end of the day, this gave you a 3.8% yield, okay? The other one was Shopify, so I'll do this last one, okay? And then we will go on to questions after this, because I want to keep the stream as short as possible. So Shopify calls gave a 3.6% move, and Shopify on the watch list said calls at 679 plus, and careful, all-time high, okay? So at 679 plus, all right, 679 plus. Yesterday it opened here at 6. Look at the volume right off of the open. That was nuts, right? This is a lot of buy volume, and you can see the average volume throughout the whole day was very good. You can see that once again, right? The average volume is here, which is higher than most of the days prior to it. So this was a good day to trade Shopify, right? The volume was much higher than usual. So you could have literally taken this trade anywhere as long as it broke 679 plus, okay? 679 plus, 679 here, right? So you could have entered the trade maybe at 680 if you wanted to be safe somewhere here, right? Maybe on this candle. And that would have yielded you all that, right? And then as you know, you would have seen this corrective wave and then another up wave here. This is somewhere, actually you could have exited somewhere here when this red candle came out, showing you know, a reversal pattern, okay? So that's how you use the watch list. And you can see if you held the position till here, you already knew what's up because of the volume of selling here. And you could see indeed it was volume selling. If you go into the 1 minute, you would see that the OBV started to flow out. You see that? If you look at it on a longer time frame, the OBV can be misleading. So you have to confirm by looking at a shorter time frame like 1 minute. Therefore, validating your thesis that volume is indeed flowing out, and volume went from a high of 9% on the day, you can see it on this side, all the way to about 3.3 to 4%. So there's a 5% of volume outflow during this period over here. All right. So I hope that makes it a little clearer how to use the watch list, make it easier for you guys to understand. If you're part of Option Swing, we get a lot of these questions on the educational chat, and I was hoping to address it here. So I hope that was helpful. All right. So let's take these questions now. Good morning. Good morning. Appreciate you guys being here once again. Thank you for liking the stream. This helps me out a lot. I cannot thank you enough. Please continue to smash the like button. That's amazing and important for me. If you haven't subscribed, go ahead, do that. Also, just as I was telling everyone earlier, there are 4 spots left for the Everyday Growth Advisors mentorship program. Hit me up for those on Instagram or on Discord, whichever you please, and we'll see if we can get a spot for you. Okay. All right. So let's see, views on Pinterest and NCLH. Pinterest just beat earnings. Let's not do that one. It's going to be a very conflicting signal. NCLH. This is Norwegian Cruise Lines. I wouldn't touch this stock with a 10-foot pole right now. It's just no sign of recovery. Volume looks terrible. Even more selling. If anything, you want to play this, wait for the break below the support here. Take puts down. But as I'm gonna say to you guys, the risk to reward ratio here is very slim, very slim. The risk to reward on the upside much more higher. Therefore, I don't like this trade at all. I don't like these setups in general. Something that has like, it's like this is the bottom. Okay, hold up. Let me try to draw that better. Let's say this is the bottom, right? And something's going like kind of like asymptotic like that, right? How do you know like when this is the bottom, right? So there's no reward for you to play this to the bottom. The reward is up above you. So I wouldn't play it to the downside. But then this company has shit fundamentals, and at the same time, it's a cruise line that's going to see continued outflows. So I just don't see the value to play this right now. That's my take on it. Remember, stop trying to buy the cheap stuff. It doesn't mean cheap is good. Okay. Thoughts on space? Okay, space might be a better play in this situation. Space, high volume buying yesterday. Let's confirm and see if it was indeed high volume buying. Yeah, there was volume buying yesterday. Right here. 5-1. Well, it's actually, this was on May 1st. Yesterday, it was actually volume. Yeah, it spiked. It spiked sometime here, but then it got sold off aggressively. So be careful with space. A lot of funny business going on here, guys. You see what I'm saying? Look on the 5-minute chart, okay? Or actually, yeah, you can see like it got bought up here a lot, and now it's starting to sell off gradually. So on the technical side, it looks bearish for now. It looks bearish. You can see the death cross, right? So it's continuing its downward movement. It broke up above and then it broke down below, and now it's continuing to hug the moving average downward. So even though there's bullish news and earnings that just came out, be careful of stocks like this. I saw a little bit of buying at the end of the day, but nothing crazy. This was very small amount of buying, not anything crazy. Selling and then buying. This is a mixed signal right here. I wouldn't play space. Wait for a better situation. Got to be patient. Shopify at 800, possibly. I didn't look at whether they beat earnings or not. I'm guessing that they did. That's why you're saying that. Impossible Burger is great. Yep, I agree, man. I'm right there with you, man. Beyond is like a kind of a, I don't know. It has like a gamey taste, but it's like. One time I was cooking a Beyond Burger and I actually thought that it was like, beef or something, and that was kind of scary for a second. But it is like, I think that's the point, right? They try to make it surreal, but it's texturized really well though. The Beyond Burger has a nice texture. Impossible Burger has a more like, I don't know, a tougher texture, I want to say. All right, so thoughts on what is this? WH 40 call 515 expiry. I like how you guys now use the live stream as a way to know my opinion on your positions. All right, let's do a 1 hour analysis. 40 call for 515. Seems like you should be fine. I mean, it doesn't seem like you're in some kind of deep trouble. I think you'll hit it, right? You should be in the money. Depends on how. See, when you ask me these kinds of questions, you remember that I'm giving you my view objectively as knowing if you're gonna hit the strike and be in the money. Now there are some exceptions. The exception whether you'll be profitable lies in how expensive you got these contracts for and how high was the IV when you bought the contract. So if you bought them for expensive, then no, you wouldn't be in the money, right? Even if you hit $40. But if you got the contracts for cheap, then you will be in the money when it hits $40. And I think there's a chance that this stock will hit $40. It looks like, it's moving sideways, but it's consolidating upwards. It needs to go up to test this one more time, but it seems like it will come down before then to go down and touch, cover this gap and also touch the moving average before going back up. So if you are still feeling uncomfortable, I would recommend you to roll over to the next week after that. Can you show what the chart showed you on Apple trade yesterday and Tesla trade on Monday? So I went through the Tesla trade. And let's see, Apple trade. Okay. So here's what I saw on Apple and the reason I traded Apple downward. Okay. Apple had been trying to break this resistance twice yesterday, okay? And it had been doing so on very low volume, all right? And then what happened was it failed to break here. It came up, it did break, but on low volume. It was very low volume. You can see, literally, look here, it's super low volume, okay? This is not a real breakout. This is called a fake out. It's when there are no sellers, okay? There's no resistance. There are only buyers. So it goes up like eep, 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 like really slowly, okay? True enough, the end of the day came and boom, sold off, right? But it doesn't mean that we're in profits now. I'm holding a 295 call, 295 put, and I took this for a next week expiry with the intention of swinging it for over the next few days. The reason why I'm swinging it is because they have bought up Apple too aggressively, and it needs to come down. There was a big impulsive wave, and what I'm doing is I'm playing the corrective wave downward. And I saw that SPY had been doing the same thing. There was a big impulsive wave, right? This big impulsive wave, and I wanted to play the corrective wave. Now remember that within every big impulsive wave, there are smaller corrective waves. So impulsive, corrective, impulsive, right? And then now it made a higher low. So I'm looking for it to go like this, like this, like this, like this, like this, right? Because remember, nothing goes up like that and nothing comes down like this, with the exception like these also had mini impulsive and corrective wave. If you look at it, right? You can see them. Okay, so it's doing the same thing here. Now, impulsive, corrective, impulsive, corrective, impulsive, corrective, impulsive, corrective. We'll see if we bounce here. This will be enough for me to take profits on Apple and get out. Okay, so I'm playing it to a move down, but it's also because SPY has failed to break this level twice, double top, and we may see a bearish formation. However, as I said, there are a lot of things that can happen. News can come out, something can happen that pushes this up. And I already have a stop loss set up. So a 20% stop is what I will take. If I lose, I lose, but I like the risk to reward to the downside. I saw it moving up on low volume. Apple had a decent ER beat, but it wasn't a beat that was out of the water like, wow, you know? So I don't think that this buy up was warranted entirely from 288 all the way to 300 within a day, right? Or 2 days. I think that a sell-off should come before another buy up. And so I want to play this both sides. When it comes down, I want to be the buyer and play Apple to the upside. So I'm going to do both, okay? That's the explanation of Apple. For your group course, do you have to buy the pro package on TradingView? Absolutely not. Absolutely not. You will be more than fine with your free TradingView. That's all you need to do the package. And TOS, if you have it. If you don't, that's fine too. Majority of the teaching is going to be done on Zoom. You would just download Zoom. I have Zoom Pro, so we'll be using the Zoom Pro. And it's, believe me, if you want to read the feedback of the mentees, please go to the post that I made on the actual Instagram page showing the 7 days of growth advertisement and read what the mentees have said about the course. That way, you know, you can understand what it's about and whether they got delivered the value that they paid for, okay? Can you explain what happens when a listed company goes bankrupt like Hertz? Trying to understand why people are getting calls on that still. Well, Hertz is a rental car business, and I haven't looked into what happened with it, but let us see. It's a worldwide car company. People might be playing the idea that, you know, it's severely oversold, but you know, I don't see value in buying this business right now. I definitely don't see us recovering from this so quickly. So I would stay away from Hertz till you can get, you know, some better volume in there and start buying. Don't forget, there's a big upside to climb here, so don't be chasing for the absolute bottom. It's like catching a falling knife right now for a bankrupt company. Okay, they had basically too much liabilities or too much leverage, and the company is going bust, from what I understand. So people might be buying it based on a turnaround, but you know, just don't get into it. Thoughts on Disney? I just did a breakdown of Disney with my mentorship group today. We went through the earnings report. So my take on the earnings report, if you read it, you'll realize, first of all, you need to realize that Disney has a crazy amount of companies that there, Disney, this here. If you want to see what Disney owns, look at this. This is what Disney owns. Okay, it has the Fox Entertainment Group, it has the Sky Group, it has National Geographic, Disney Music Group, Disney Theatrical Group. It has History Channel, Disney Channel, ABC, ABC News, ABC whatever, blah blah blah, ABC, all this, ESPN. They own all this stuff that's on the side. I don't even know what that is. Okay, on this side they have Marvel Studios. They have entire Marvel universe of toys and television and I don't know, a whole bunch of other stuff here. Walt Disney Studios that produces all this. Pixar belongs to them. Lucasfilm Limited, 21st Century Fox belongs to them. Disneyland Resorts, all of the customer experience products. Disney Corporate, they own, okay, Hulu, they own GoPro, they own a whole bunch of other stuff like Steamboat Ventures, UTV. I've never heard of half of these things that are here. You can go look at it one by one. Basically, they have a lot of stuff in their holdings. Okay, they're literally diversified between film, television, music, radio, gaming, finance, theater, consumer goods, property, parks, publishing, digital, miscellaneous. Now, when you read the earnings report, you will realize that Disney's parks sales are down, and that's what's causing the bottom line to really be hurt. Okay, but then they're still investing investments of about, I think, 2 to 3 billion, okay, in capex expansions, so additional parks and programs. Okay, so capex expansions, they're still investing into there. Okay, comparatively to how Apple did for earnings when it covered the gap for the lack of iPhone sales with service revenue, Disney didn't manage to cover the gap with its streaming business. Okay, however, the thing is that Disney Plus is showing good growth. Okay, and I think they added something like 20 million subscribers, down from the 30 that were there in the previous quarter. At signups, when Disney Plus opened up, they were at 70 million, which was very, very good. But then the attrition started to kick in and people started dropping off. Okay, so overall, it's a very mixed earning. That's what I want to say. But at the same time, I think that this is not the time to buy Disney. I think you should wait, as I think the stock's going to be sold off further, and then you'll get a really good deal on it. I don't think that this is a good deal right now. Beyond continuation today, possibly. It did have a big beat. I'm not going to buy it unless it comes to the price that I want to buy it at. Nice, I was confused about the washes. Great, I'm glad I answered that question. What are upgrades and downgrades, and what is a good website that discusses them for stocks? Upgrades and downgrades. So upgrades and downgrades are generally analyst sentiment based on their calculation of the stock's intrinsic value. What is the stock actually worth compared to what it is on the market? Analysts determine those things. As an investor, you should be able to do this. Right after I'm done with the course on the markets, I'm going to be making an advanced course to be teaching you exactly how to make your own calculations. So stay tuned for that. Excuse me. There are many good websites that do that. Investing.com, there's MarketWatch, there's Seeking Alpha. Try to look at all of them. There's no one good website that does it. If I will find the best one and I'll let you know the next stream. Remind me about it. I will definitely do that. How do you add OBV indicator to your chart? When I added TradingView, it's on the bottom. Okay, great question. This is a common question that I get. So when you get OBV on your chart, it's usually down here, right? On the bottom here. All you do is you click on the line and drag it to the top. Oh, wrong one. Oops. Click on the line till you see the dots and you drag it to the top. Now, when you drag it to the top, what's going to happen? The scale on the left side is going to be in millions of shares. I like to keep my units consistent, comparing apples to apples and oranges to oranges. So I right click and change it to %, and voila, that's it. Two-step process. Very easy. All right. I like to keep my stuff simple, guys. I don't like to complicate things. It doesn't make sense. How do you visualize pre-market to set up your day? This is exactly how I visualize my pre-market. Exactly what I just went through with you. This is the pre-market analysis, bro. This is how we do it. We look at the news. We look at what's moving. We look at macro conditions. We look at the technical understanding of where SPY is going to move for the day, trying to predict where it's going to go, right? This is what we do. Apart from that, I keep a track of the watch list. If you're an option swing, you have access to the watch list, right? We post the watch list every day. So that's another thing. Is Visa still bullish? I have no idea. I haven't looked at Visa actually. Visa looks bullish, but look for a correction down before moving back up. So don't enter here. I would say at least to this level here, 175 maybe a possible technical entry there. Volume looks nice and steady. Wait for a correction down. I think the market's going to come down and Visa's going to come down with it. And then 175 you can enter for calls. The same time when the market starts to reverse, that would be a good time to enter Visa. You're welcome, Victoria. Thoughts on AMD? Have puts on it strike 53. Okay. The thoughts on AMD have puts on it strike 53. Do you think it'll drop more? And will SPY drop today or continue bullish pattern? I think that SPY is going to drop, but as I said, you can never tell. You never know. I see the double top here. I think it's bearish. Plus, it made a lower high, right? And it's starting to make lower highs, so you can see that, right? But we'll see. Okay, you can never predict the future. You just go by what you're seeing. Okay, AMD puts. Let's have a look at it. You have what puts? Let's see. 53 puts. You didn't tell me the expiry date. Come on, bro. You got to give me the expiry. You got to give me the whole contract. Even better if you give me, you know, just more info on it. I can't guide you like this. But it does look bearish to me. Might drop more. Volumes coming out. Looks bearish to me for the time being. Look for the support on 49, 50. 50 is where you want to get rid of your position. Start exiting your position before 50, in fact. 50, 50 or 50, 70 is where you want to start exiting this position for your put. How much is your course? The course is $197 for a week. There's going to be 4 lessons and a whole bunch of goodies within the course. I promise you that it's worth it. Just go look at the reviews on my Instagram. What is the timeline of your mentorship program? Do you have a layout of your plan? Yes. The lessons are going to be every alternate days, but you are free to join any lesson that you want. There are 2 lessons per day. One is at 8 p.m. and the other 8 a.m. and the other is at 8 p.m. PST, Pacific Standard Time. So essentially, you can join in whichever lesson you want. If you are not able to join into the lesson, all of the video recordings will be sent to everybody to review. And the homework as well, so that you can look through the stuff and you can follow along with the material. The layout of the program, I'm not going to really tell you exactly what we're going to go through because I want to keep that closely held to myself so that I have the jurisdiction to control what I'm going to teach. But just know that, you know, we're going to go through risk management strategies, my personal system on how I trade. There will be a fundamental intro to the stock market, all the basic things that you need to know as a trader. I will be sending out a handbook with, you know, some important information that I think that you should know to start you off. And from there on, there will be a deep dive into planning and executing trades as well as options trading. We will be discussing options trading. We will be discussing covered call strategies as well as the wheel cycle, which is a long-term plan cycle that you can take advantage of. Okay. How do you use the options calculator to estimate opening day prices? Personally, I don't use the options calculator. I just multiply. If you want to know roughly how much your opening day price is going to be, it's pretty simple. Calculate how many dollars away you are away from the strike. Take delta, multiply that by the number of dollars you are away from the strike, and that should give you your answer. A rough estimate, not the exact, but a rough estimate. What price would you buy Beyond Meat? Well, when it comes down, right? It has to come down. It's way too high right now. I would buy Beyond Meat when it comes down to probably 107 or 108. It's going to rally today, and then when it comes down, that's for the corrective wave, that's when I'll get it. Because it could shoot up to 130 or 140 very quickly. It has done that in the past. You're welcome. What do you think about playing PayPal earnings? It's a 50-50 flip, man. Always 50-50 flip. Always remember earnings are flips, but I'm more bullish on PayPal than most other companies. It's an internet-based company. People are going to be using PayPal more than ever, and I like the business. It's a good business model. You'll have to do your own due diligence also. 5:15 expiry. Okay, so that makes it a little easier. Okay, so AMD back again. And this is going to be the last analysis I do of the day, guys, so that we have enough time for the opening of the market. 5:15, you have a 53 put. Yeah, you seem good, man. I think you'll be fine. I don't think that AMD is gonna, mess you up like that. So take, I think take that position off at around 50, as I was saying, 50, 70. You should start tapering it off. If you have multiple contracts, start getting rid of them the moment it breaks 51, 40, 51, 50. Start taking one off here, another one here, another one here. Like, if you have multiple positions. If you have just one position, then just take it off closer to 50, 70. That's what I would say. So, all right, cool. There you go. Kirk just said in the chat, you can read it. I'm a part of the mentorship group and highly recommend it. I have a full-time job and it's very scheduled, but also flexible to your own schedule. T is a great teacher. Thank you so much, Kirk. You are so awesome. You are one of my best students. Thank you for being a part of the course. I really do appreciate you, man. One last question, please. When you enter a position, you look at 1 day, 1 minute MACD and RSI, or 1 day, 3 minute MACD, RSI. Always check the trend. I don't use MACD at all. I don't use it at all because I have moving averages to tell me what moving average is moving over what. I wouldn't recommend using 1 minute or 3 minute. I would recommend using 5 minute on an intraday trade. If you're day trading, use 5 minutes for your day trade signals. Don't use 1 minute and 3 minutes because there's too much noise. Is the volume for breakdown better? Is the volume on 1 hour or 15 minute? So for breakdown, I would recommend 15 minute. Yes. So the thing is with the 1 hour, you wanna, for 1 hour is strictly for trying to understand the long-term trend that it's building. Like, for example, when you look at the 4 hour, you can know the bigger picture, like the impulsive wave and the corrective wave. But then over here, you can't tell where the mini waves are within this. So you have to look in on the 1 hour to tell you where those mini waves are. You see? Now you can see them. Okay, impulsive, impulsive, right? Corrective, impulsive, correct. It's kind of like that. So when you're looking at the breakout, I would use 15 minute because it's an intraday strategy. So you're looking at a breakout of a pattern, say below this, then you would use the 15 minutes to judge where the volume's at, how it's breaking out, and then go from there. Like this over here, something like that, you can tell like if it breaks above or below resistance, using 15 minutes is better for the intraday strategy. What's it like being the What's it like being the coolest guy in the options team? I'm not the coolest guy, man. I just enjoy what I do. I'm passionate about what I do, and I like helping you guys. So this is what it's become. The Everyday Growth Advisor started as a joke, guys. Honestly, it did start as a joke when I was in San Jose State University between me and my friends, and it's grown to a very humbling size now, and I'm very, very happy that you guys are on this journey with me. I really thank each and every one of you guys for tuning into the live stream and being here with me. It's awesome to just have you guys here. So do you think Micron looks bullish or bearish for the week? Micron. Okay, this is the last question I'm going to do today. This market opens in 2 minutes and I want to close out my trade. So okay, for the week it looks bearish. You can see it's like a head and shoulder pattern almost, right? The head here, you have a left shoulder and a right shoulder, and it's breaking the neckline right now. If you look at it, right, if it breaks below, then you're gonna see a downtrend. So looks bearish to me, in my opinion. Volume is flowing out. Moving averages, we'll have to see how this one does, but there was some buying at the end of the day yesterday. You have to confirm it. There was some buying and selling. So it's a mixed signal right now. But I would say the short-term signal is a downtrend instead of an uptrend. All right, guys. Thank you once again. Please like the stream, subscribe if you haven't. Seriously, guys, liking the stream helps me out a lot. I really appreciate it if you did that. And have a good day. Happy trading. Ding, ding, ding.